Order blocks, one of the most essential aspects of trading with smart money concepts. When you combine the word order blocks with ICT, the only images that populate one's mind is money, money, money. In this video, I'm going to showcase a unique type of order blocks that you can use for insanely profitable trades. This is an order block concept that was discovered by the popular trader ICT. We're going to be using a single indicator to showcase this strategy. Stay tuned because it's going to be a wild ride. Now, to get started with this strategy, we need to add an indicator known as ICT single candle order block. To do that, we're going to go to TradingView, which is the trading platform that I'm going to be using. If you need to sign up, the link for that is going to be in the video description. Next, you want to load any trading security in any time frame and then open the indicator search tab and then type in single candle order block. Be sure to select this one by UAlgo. This video is about order blocks. Now, you may be thinking, but what exactly is an order block? Well, an order block refers to specific price areas where large market participants, such as institutional traders, have previously placed significant buy or sell orders. Clusters of orders are present in these areas, which can have an impact on price movement, liquidity, and market sentiment. In simple terms, the concept of order blocks is a certain type of approach for identifying key levels of support and resistance based on the behavior of institutional traders. These key levels can then be used as entry or exit points for trades. Now that we know exactly what an order block is and what it's used for, the next question is, what exactly is the ICT single candle order block? Well, a single candle order block, also known as SCOB, is a refined version of the general order block concept identified through the analysis of just a single candlestick pattern. The focus is on key candlestick patterns, making it easier for traders to spot critical areas of market activity. And this indicator is the one that we're going to be using for identification of these single candle order blocks. Now, just like any concept in trading, we're gonna have bullish SCOBs and bearish SCOBs. For the rest of this video, I may refer to single candle order blocks in their abbreviated short form, which is SCOB. Now, how exactly is a bullish single candle order block formed? Or should I say, how exactly is a bullish SCOB formed? Well, these are the characteristics. Number one, the open price of 2 bars ago should be higher than the close price. That basically means that if this is the current candle, then this candle should be a bearish or a red candle. Number 2, the close price of the previous candle should be higher than its open price. This is the previous candle, and what that basically means is that this candle should be a green or a bullish candle. Third, the current close price should be higher than the current open price. This is the current candle. Having the close price higher than the open price also means that this candle is supposed to be a green candle. Number 4, the low of the previous candle should be lower than the low of 2 bars back. What this basically means is that the middle candle should go lower than this candle, as showcased here. Then lastly, the current close should be higher than the high of the previous bar. So this is the close price of the current candle. And as you can see, it is indeed higher than the high of the previous candle, which is this. In general, this is how a bullish single candle order block should look like. Once the indicator identifies something exactly like this, it's gonna plot a horizontal level beginning from the high of the middle candle to the low of the middle candle and extending it to the right. So to give you an example of this on a live chart, this is one example, this is another one, and this is another one. Now, at this point in time, I know you may be thinking,
but what about a bearish single candle order block? What does it look like?
Well, it's basically gonna be the opposite of this, which is this. So basically, 2 candles back, you should have a green candle. The middle candle should be a red candle. The current candle should also be red. The middle candle should go higher than the high of the green candle. And then the current candle should close lower than the low of the middle candle. Simple. Once the indicator identifies this pattern, it's gonna plot a horizontal level beginning from the high to the low of the middle candle. Now, on a live chart, this is one example of a bearish SCOB, this is another one, and this is another one. Now that we know exactly what this indicator is made of, let's take a look at the settings of it so we can see how customizable it can be. Right off the bat, we can see that on the Inputs tab, you have an option to show single candle order blocks. With this disabled, no order blocks are going to be displayed on your chart, so you may want to enable that. Next, we have the mitigation method, where we have the closing of a candle to mitigate an order block, or we can also choose to mitigate an order block after it's been touched with a wick. For this video, I'm going to stick with the close option. There is an option to show a specific number of single candle order blocks. The default value is 3. And then we have the apply volatility filter, which enables filtering of order blocks based on volatility. When enabled, only order blocks with an ATR value above the mean ATR value will be showcased. I'm gonna enable that. There is also an option to change the colors. After that, click OK. Now, before we explain how we can use this indicator to trade, as is the rule with any strategy, we need a tool to understand the trend direction of the market. That tool is going to be one of my favorite EMA indicators, which is called 7EMA_5MA. This one by Storewise. Double-click on it so we can change some settings. On the Inputs tab, change EMA 1 length to 50, EMA 2 to 100, and EMA 3 to 200. On the Style tab, you want to disable every single EMA option except for the first 3 EMAs. Change EMA 1 color to green, EMA 2 to yellow, EMA 3 to red. You can also go with your own colors. This is just what I like to go with. After that, click OK. This EMA indicator is the one that we're going to be using to identify the trend of the market. Whenever the EMAs are aligned like this, with the price consistently trading above them, that would indicate that the trend of the market is bullish and we're only going to be looking to take long positions. The opposite of this is this, and it indicates that the market is bearish and we should take only short positions. Now, for trading with this strategy, the first condition is going to be to identify the formation of a bullish single candle order block, also known as a SCOB. As you can see, we have it right here. The second condition is that we want to confirm that the market is bullish. As you can see, we have these 3 EMAs aligned in a way that indicates a bullish market. Then lastly, we want the price to come back and retest this order block. A retest is going to be confirmed when a candle closes inside but not under this level. So this candle closed inside the order block level, which confirms our retest. After that, we're gonna put a buy stop order at the upper level of the order block. So right here, the stop loss is gonna go right at the bottom of the order block or at the most recent swing low, whichever of the two that is lower. The take profit is gonna be set at 2 times the risk. Letting the trade run, and as you can see, it was indeed a profitable trade. Now, just a few hours later, we had another position. The trend of the market was bullish, so we would obviously be looking to take long positions. We had a bullish SCOB, or a bullish single candle order block, and then the price came back and retested it right here when this candle closed inside of the level. Now, as soon as the candle closed inside the level, we placed a buy stop order just above the level. We set the stop loss under the level. Once this order is activated, we will be in the position with a target of 1 to 2 risk to reward ratio. And as you can see, that is exactly what happened, and the trade was profitable. Now, to take a short position, it's going to be the opposite. So the trend of the market would need to be bearish like this, as indicated by these 3 EMAs lining up like this, and the price trading under all the EMAs. We locate a bearish single candle order block, which is identified by this indicator right here. And then we wait for the price to do a retest of it. A retest is going to be confirmed when a green candle closes inside but not above this level. This is our retest. Now, once we have this candle, we need to set a sell stop order just under the order block level. The stop loss is going to go above the level with a risk reward ratio of 1 to 2. If the price comes back down and activates this entry, we will be in the position. So let's see if that happens. And as you can see, this was a profitable trade. Ladies and gentlemen, this is the ICT single candle order block indicator. Go ahead and check it out on TradingView and figure out a way that you can incorporate it to your trading arsenal. If you find a way to use it alongside your strategy, be sure to let us know in the comment section below. Well, that's been it for this video. I really hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.